The IRS has finally come out with long-awaited guidance on how they're going to treat the PPP, the Paycheck Protection Program, forgivable loans. I've got those details coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. If you're new to this channel, hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so the IRS has issued long-awaited guidance on the Paycheck Protection Program, PPP, forgivable loans, and you're not going to like it. But it all points back to the need for tax planning right now for your small business. All right, a quick recap. The Paycheck Protection Program, that was a very, very unique loan program set up in the CARES Stimulus Act back in March, and it did an amazing thing to help small businesses. If you're just paying attention at all right now, you can see big businesses are flying high, valuations are way up, stock market's way up, small businesses are struggling. Small businesses are struggling, and for every small business that fails, that makes large businesses worth even more. I mean, it's just not fair. But we believe small businesses are the lifeblood of our economy. And so Congress put in the PPP program in the CARES Act to help aid small businesses and protect jobs for employees at small businesses. So you got this loan. The loan was calculated based on your payroll for a few weeks prior, okay, your average payroll, right? And then if you kept your head count the same and if you did a few other things, and you could use this loan for payroll, for rent, and for utilities, other things, and if you used the loan for those required purposes and you met all the requirements, which they were detailed, but it wasn't, you know, most small businesses that I know met that requirement, then the loan had this really sweet feature. It was forgivable. And Congress even came out and said, hey, we're not going to tax it. It's not taxable. I didn't believe them then either. So anyway, the IRS came out and said, okay, maybe the loan and the forgiveness of the loan is not taxable, but you've got to use, in order for the loan to be forgiven, you've got to use it for certain expenses. And the IRS said, we're not going to let you deduct those expenses. So what does that mean? That means the loan drops to your bottom line and increases your profit. Because if you can't deduct the expenses, you now have higher profit. In what amount? It's equal to exactly the amount of the forgiveness. And then you have to pay tax on that profit. This is a backwards way of making this loan taxable. Well, the update right now, the IRS and Treasury came out with some guidance late in November and confirmed that stance. There were some CPAs, not us, some CPAs that were holding out hope that Congress was going to sway the IRS's opinion and say, listen, small businesses are still struggling, don't tax this money. I love that idea. I mean, it's coming, it's backed from the government anyway, so why tax it? If you're trying to give this money to small businesses for aid and to help with cash flow, why tax it and have them and force these small business owners, these small businesses to give 30%, 35% back to you? That doesn't make any sense. But I suppose it could still change. We are in the middle of December here. We still have some time, but I mean, the IRS and Treasury came out with their guidance and said, listen, we're still not allowing you to deduct the expenses you use the money for. So that's the first bad news. And that should inform your tax planning that you've got to do here in the remaining weeks of 2020, but then also leading up to when you file your taxes. Here's the second bad news, in my opinion. We've always thought, well, you book that loan on your balance sheet. It's a loan, right? And it's not forgiven yet, so you've got the cash up there and your assets, you've got the loan as a liability, okay? And if the loan isn't forgiven by the end of the year, then it's just a loan, you know, no biggie. The IRS has come out and said, if you have a reasonable expectation that your loan will be forgiven at some point in the future, not even next year, at some point. Listen, if you use the money for the right purposes and you believe you've met all of the criteria, even if you don't get a formal notice from the Small Business Administration that your loan has been forgiven, you still have to remove, you're not allowed to use those expenses as deductions on your 2020 tax return. So even if you don't have a full confidence that it is going to be forgiven, that it's forgiven in 2020, you still have to basically remove those expenses from your income statement and pay tax on your PPP this year. That is bad news. Why is that bad news? Does that seem unfair? It seems unfair because you've got to give up the cash flow. Small businesses, you know cash is king. You've got to give up the cash before you have the full confidence, the full assurance that your loan has actually been forgiven. And they've just told you, well, but if it's not forgiven or it's not all of it's forgiven the way you think, you can just amend your return. My goodness, that is terrible. This thing was supposed to be for small business aid, and the way they're treating it from a tax standpoint is the exact opposite. But we can bellyache all we want. Really, the point of this message is, number one, to inform you about these rules so you can take action. But two, it's inspire you to take action. Now is the time to be doing tax planning with your CPA, with your certified financial planner, saying, okay, now this money is going to fall to my bottom line. Are there any other deductions that I should take advantage of? And if not, how do I make sure I'm in safe harbor for my estimates, for my taxes? And then how much of this money should I be prepared to pay with my taxes when I file in the spring? So it's tax planning and cash flow planning. You need to be doing those things with your CPA and your CFP right now. And they're busy. We're getting close to the end of the year, but give them a call. If you don't have them in your back pocket or they're not doing comprehensive planning for you, call us. We would love to serve you. We'd love to help. Our full team of CPAs and CFPs are here to serve you. You can find us online, corehorn.com or wisemoneyshow.com, or send us an email, info@corehorn.com, also by phone, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.